Okay, so we should be live here. Let me just double check. Wait for it to pop up on YouTube. What's up, guys? Hold on. I'm just going to make sure we're live because I don't see the confirmation yet, though it says we're live. Yeah, we are live. We are live, though the thumbnail's not correct. But anyway, welcome back to the channel. Right now we have CTO Larson here. We actually just did a collab very recently, and now we have him on the channel, and we're going to talk about a little bit of his side, his history, his methods, his strategies, and approaches to the market. So, Larson, how are you doing?
Thank you very much. Huge greeting from Sweden. I guess your audience know that you have a Swedish dark past, and now it comes to find you.
That's right. We have that in common. I can speak a little bit of Swedish. Jag gillar glass, stuff like that.
Yeah, exactly. I like ice cream, for if anyone was uncertain. So that's pretty much all you need.
Just cross the border and just say that.
Yeah.
But yeah, so it's not Svenson, but it's Larson, as you said. So let's talk a little bit about your previous career, because some of my viewers may not know you. They may not be too familiar. So what is your previous career leading into becoming more crypto focused? And how does your previous career possibly give you an edge right now?
Yeah, so I'm a technology guy. I'm not a finance guy from the beginning. So when I was 11 in the 1980s, I'm very, very, very old. So I was the computer guy. No one really understood what's it good for. And then I was the internet guy, and everyone but no one needs to use the internet for anything. It's only criminals and immoral activities. We've sent post forever, and that should be good. And all the politicians were against it, and they were scared, and they felt that who is the responsible publisher for the internet? Because on newspapers and so on, there is a publisher. Who is publisher on internet? And the answer was no, there's no one. Anyone can publish whatever they want. And they were freaking out, and they wanted to ban it, and they wanted to ban encryption on the internet and all those things. And but I saw that this is a potential. I think this will go places. And then after that, then I was still in university. Then I started working. We started working with the telecom, and it's incredible. But I've actually played a key role in creating technology that's used by almost all people on the earth now, the 2G, 3G, 4G, 5G technology.
So you were part of the 2G to 5G progression then, huh?
Yeah, absolutely. So
then you must be, then that means you're very familiar with trends and seeing trends play out and how they develop and stuff like that. And is that maybe where you think your edge comes in, is the, having a history of seeing some of the most forefront technology actually grow from the ground up? Right.
Exactly. So through this journey, it happened pretty late, but I kind of realized that global technology almost always behaves in the same way. That either it becomes like one of these technologies where it really works out and it's used by almost everyone on the planet, and they are truly global protocols. Then TCP/IP, HTTP, the 2G, 3G, 4G, 5G protocols, they are truly the same in the whole world. Even, in China or Russia or US or Sweden, we all use the same base protocols. And so either it works out, and then, it doesn't only go 10x, 100x, 1000x, 10,000, it's used by everybody, or it fails and it gets replaced by something even better. And global technology almost behaves like that. So the same is true. I mean, I was sure with the computer, I was sure with the internet, I was sure with telecom, but I've never been so sure as I am with blockchain and crypto that it's going to follow the same journey. And if we know that it will, work out, there will be these extended trends again, or but perhaps we don't know exactly which company in the .com era, or we don't know which layer one protocol in the end will be the most successful. That we cannot say with the same certainty. There's a lot of people who are going after Ethereum's use case, challenging them, and who knows, maybe the one that we all use in 15 years. Maybe it's not even invented yet. We don't know. There could come something even better. But
that's always
there
what I
will
think
be,
too. Yeah.
yeah, there will be a protocol, and that protocol will trend. And some of the other protocols, they will trend to zero almost. And that's almost how it always works out. So yeah, I have that insight, and I've lived through it, so I know that it is true. I feel
Yeah.
it. Yeah.
Yeah, I think it's interesting that a lot of there's only like a dozen or two companies that have lasted in the stock market over the past 100 years. So in a 100-year period, almost everything changes, almost everything you see changes, and only a small group of them stick around. And the same thing goes for crypto. Every halving, basically, there's just a whole new set. A couple stick around, almost all of them disappear. But with that being said, what is just a quick question? What is your favorite layer ones? What do you see as being the forefront or with the most potential?
I think that the ones that are the largest now, they probably have the best bet to continue being the biggest. So I think Ethereum, Bitcoin probably have the best bet to continue leading. But I'm not as certain as many others, because we had deployed 2G to billions of people. We had put million concrete towers all over the world, and we had put the physical hardware in the pocket of 2 billion people. That's way ahead of where any crypto is, and crypto is only software. It's much easier to replace, and still it was possible to replace that with a sufficiently better protocol. But 3G never became the biggest protocol. So even though 3G was much better than 2G, it wasn't sufficiently better to phase out 2G, but 4G was. Then 4G was so much better that it kind of was worth replacing the whole, billions of people's hardware and billions of network devices all over the world. And so I think that the same could possibly happen in the blockchain space. That it's now Ethereum. If we're looking at the smart contract platforms, Ethereum is the leading one, and there's a lot of challenges. There's 100 challenges, and I don't think it's enough to be like twice as good or 3 times as good or 5 times as good, because you're not going to overcome the network effect. But if something comes and is 100 times as good and has a way to reach out, yeah, I think it is possible to replace, or I know that it's possible to replace technology. But we also have examples of the opposite. If we look at TCP/IP, it's still the king. So I'm not saying that it will happen with certainty. It could be that, say, Bitcoin and the Lightning Network or something like that, it could stick around if it's developed sufficiently to stay ahead. But I think that we're still very early. We're much earlier than many people realize. It feels like but we're so advanced, and
it's like the point that I think where blockchains really made it is when you can't tell that you're using it.
We're at the stage where we're at the first dial-up modem, like the amazing, you could sit at home and with your landline you could dial up to internet. We're somewhere there. Or we're like at your home computer has 2 kilobyte RAM, or the mobile phone weighs 20 kilo and you have to carry it in a heavy bag, and it's super expensive. We're kind of somewhere there if we're looking at how many people are using it and what's the usability like and so on. It's not really ready for prime time we're not like at the iPhone age where everyone in the world can use it and it's working fine. Everyone in the world cannot use the current protocols. They're too difficult to use. It's too easy to screw up, and it frankly doesn't really scale for, say, 8 billion users or something like that. If that would happen tomorrow, it wouldn't work. So I think that that's opportunity here, that we're still in the beginning of a giant journey, and I am certain that there will be this kind of trends in both directions. And that's really the background for my I'm a trader also. I love the market and I love the trading, but this is really what's behind my whole philosophy of trying to latch on to the trends, because I know that the trends will be long and big in both directions. And if we can catch them, that's enough. We don't need to buy the bottom or sell the exact top. It's
Right.
enough
And
to hang on.
this is something I love that you said recently on your channel, was that, people are always asking, how do I buy the bottom? When is the bottom going to come in? And they're just so focused on buying the bottom. And it's like it's kind of a waste of time in a way. But what you were saying is that it's not about just catching the bottom. It's you got to know where the trend is, right? It's about trend identification, and it's okay to sort of, wait for confirmation of a bottom. And once you get the confirmation, great. Now, well, not for sure, but of course, now you're much more certain, and you can actually catch the trend and remain within the trend, and then use trend identification tools, which you've created yourself, stuff like that. So trend identification, I think, is something that at least I notice with your content, with that you seem to be very skilled at.
Exactly. So, and this works with technology assets. This is not the same with, say, traditional assets, and the reason is that the trends are not so big. Like something that is cyclic. I don't know, wheat or something. I don't know anything about wheat, but I guess it's harvested and sometimes and so on. It can oscillate in between different price levels, and a trend process is not so good then, because the trend might not be so long. But with blockchain, with technology in general, we know that the trends are going to be long, because there is no middle outcome. You cannot be like a fairly successful layer 1 protocol forever. That outcome doesn't exist. It either has to go somewhere, or it's going to go disappear and be replaced by something else. So
yeah, the one thing.
Yeah.
Sorry, I was going to say the one thing that makes me a little bit confident about Ethereum is the fact that it's the ability for things to branch out of it. Because for example, Polygon, there's so much development taking place there. The ecosystem is growing, and you can have Ethereum as this like base layer, and then you have all these things branching off of it, where even if Ethereum isn't the most efficient, isn't the fastest, whatever, it still gives the ground floor, the foundation for DeFi. It is like such great foundation level for things to sort of bloom and branch off of it, which is, I think, one of the things that makes Ethereum so powerful. But just wanted to add that in.
Yeah, absolutely. I agree 100%. It is the one that maybe we all trust the most. If we have to trust something with our money, probably that's the one. If we have to pick one, DeFi layer 1 smart contract platform. So I think that's the advantage that Ethereum has. The disadvantage is probably speed. I'm sure that the guy sitting programming and checking in something here, they feel the weight of the world's financial system on their shoulders. You do a mistake and you block all the USDC, USDT, all the contracts. Half or I don't know, 3/4 of the projects on CoinMarketCap are suddenly dead, and that's a pressure, right? So you become very careful, very slow, and that's the opportunity then for someone else to come and build something radically better and still manage to get enough traction to start challenging it. And I think that this will probably be the game that we will see. And it's very difficult to predict the outcome. And that's really my philosophy also, that I try to not really predict so much, because it's very difficult to predict the future. But it's fairly easy to identify trend, for example, and see if it is moving ahead. And if it is moving, try to stick to it. And if it is starting to go in the other direction, try to get out of it. And that's, I've thought a lot, obviously, about technology history, and I think that this will continue to work. It has worked very well so far in blockchain, but and of course we don't know about the future. But I think that it will continue behaving approximately this manner.
So like the S curve for like trends and stuff like that, how things grow. Where do you think we are in that, or do you think that we're sort of still in the parabola, or sort of in the flattening out area, or do you have a different perspective?
I know exactly where we are, because it's funny, if plotting for like a decade or 15 years in telecom, we used to have a graph where we plotted all the users, and then there was like different technologies, see which one is taking over. If you take that one with mobile phone users, and then you plot the Bitcoin users in it, you can't see the dot.
Wow. Okay. Yeah, you should post that on Twitter. I'd like to see that.
Or it becomes like 1 pixel out of 100, something like that, because maybe there is 100 million people that has used Bitcoin, and then we're very generous. Who has used it for anything else than, speculate on an exchange where you buy and then you sell. You don't actually have the Bitcoin because it's in the wallet of the exchange, and you're just a database entry in a normal database. But if we're very generous and we say 100 million people have used it, compared to there's about 8 billion subscriptions or mobile phone subscriptions, little more than 5 billion individual people. It's so small at the bottom you can barely see it. And then I think we have grossly overstated how many people have actually ever used Bitcoin, not just had that exposure to the price. So we are very, very early, and much earlier than I think when living and breathing this every day, it feels like we've come very far, but we're still very early. So I think there is enormous potential ahead. We're nowhere near the end game for this or anything like that. No.
Yeah, I don't think so either. I think that if you look at if you think about gold, right? Gold is not very accessible. Bitcoin is very accessible. So if Bitcoin starts to really get integrated with everyday internet activities and stuff like that, like I'm talking about, like really integrated where people are using it for commerce. I mean, it could blow past the market cap of gold, in my opinion, because of the accessibility.
Absolutely. I think
it just could take time.
There's very few young people today who would go out and buy physical gold or something like that as an investment. They would, buy Bitcoin instead. Seems
That's
like
right.
the more rational choice in today's age and time.
Yeah,
so I think so too. I'm certain of that.
I was gonna now move us on to the current situation in the market.
Exactly.
I saw that you had some interesting slides about the historic, seasonality of the markets?
Yeah, exactly. Because we share a lot of opinions, you and I, and that's why it was so fun when we first started talking. And I've seen that you have recently shared a lot of insights about the current crash compared to previous crashes. Can you see my screen?
Let's bring it up now. Here we are. So let's see if we can. There it is. Cool.
There it is. Yeah. So we will look at both S&P 500 and Dow Jones, but we will start with Dow Jones, and we think about two things. I know that you have talked about this already, so I'm just adding on what you have already shared with your audience, maybe adding a little bit different perspective. So if we look at the Great Depression, the decline from peak to bottom was 90%, and it took 148 weeks. Then if we move on to look at something like Black Monday, that was 41% down, and it was instant. It happened only in 8 weeks. Look at the dot-com crash in 2000. That went minus 40%. And the duration in weeks from peak to bottom was 143 weeks. Mortgage financial crisis 2007-2009. That from peak to bottom was minus 54%. Took 73 weeks. COVID-19 2020 was minus 38% and was 6 weeks from peak to bottom. And then we can observe something else, that in every single one of those previous crashes, there was kind of a bottom pattern in the chart. You could identify at one point there was a bottom pattern, and at that point it was possible to rebuy. Again, I think it's very difficult to nail the bottom, because on the day of the bottom, you don't know it's the bottom. But you could, in the previous ones, at some period afterwards, identify that there is now a clear bottom pattern in the chart. And if we then look at, apologies, where we are today, I call this hangover recession, because I feel that it's all caused by the lockdowns and everything that has been going on, and now is the hangover that's happening. And we're only down 22%. And it's only been 38 weeks from peak to bottom. And if comparing with all these previous ones, does that feel like it would be the bottom? Probably not, right? And there's no signs of any bottom pattern in the chart. So if we then move on and look at S&P 500, it looks very similar. Black Monday was minus 41%, dot-com crash was minus 50%, mortgage crisis was minus 58%, COVID-19 was minus 35%. Why would the hangover recession only be minus 25% before we turn around? I feel that seems optimistic. And the two previous ones here, the major ones, like the dot-com crash and the mortgage crisis, they were much longer than we've had so far. We've only been 38 weeks into this one. And also on the S&P 500, there were bottom patterns. It was possible to identify trend reversal at one point where it kind of enabled a confident entry without just trying to catch a knife or something like that. And today we don't have any bottom pattern. Trend is still down, and we're only 25% down. I don't know if you guys can see this, but there is also the economy is crashing here outside, literally. There is a huge construction, and the economy is crashing outside.
Behind him, there's construction. People are dumping things, so you're going to hear some crashing noises.
Exactly. But... I've actually signed up a second office today. I've gotten the keys, but
so I'm going to add something real quick. One thing that I also saw recently was that there was never a traditional market bottom without the Fed actually reducing interest rates. So right now we have the Fed raising rates, and it's going straight up, and they're saying we're going to keep going with it, most likely. Of course, we do have a Fed meeting today, but if you think about that there's only been a bottom formation in the traditional markets during one of these recessions once the Fed turns that around. So with that being said, in all the data you're showing here, that it could take a significantly longer period of time. And also we've seen that recessions take hundreds and hundreds of days to play out, anywhere from 300 to 900 days.
Yeah.
And that means we could have at least another 300, 600 days left. And that seems crazy, but that's just the average time.
Exactly. So I think it seems very optimistic to think that it would turn around here. Then almost something has to happen, some political agenda or something like that, because usually it has not been this mild. And the macroeconomic situation seems kind of rough, I think, at this point.
Yep.
And if we look, I prepared this because you talked about that, how to buy the bottom. And I say that there are three ways to do it that I use. And the first one is really this. I think it's contested that if a Baron Rothschild ever said it, he probably never did, but he did act on it. You buy when there's blood in the streets, even if the blood is your own. So that is one. You just go against everyone else. Number two is that you buy a support and set a stop loss. So you take a gamble. If price bounces at support, you buy there and you cut it if it drops below the support. That would be the second rational way to try to catch a bottom without only guessing. And if you're right, the stop loss will never hit. And if it wasn't the bottom, you lose a little bit, but that's it. But the third way, I said three approaches, and the third way is usually the one that I use, and that is to not do it, to not try to buy the bottom, because it's usually doesn't work out. It's very difficult to know that it is the bottom on the day it is the bottom. But if we should look at characteristics of it, it is really when everyone is convinced that we're going further and that there is no way it's turning around yet. That would be the bottom. And I don't think we're there yet. I feel that many people think it's going to go lower. Some people think it will turn around and so on. It doesn't feel like the worst day of history. That's what it's going to feel like the day it actually is the bottom. Then the last bull has sold that day.
Yeah.
That's the bottom, and that's why it is the bottom, because there's no sellers left, sort of. So I really feel that is that's probably I stop sharing that. So
yeah, so I was just thinking, like, you know, if like you just showed the timing and the usual percentage drops of these recessions, and how if you take the average, which I made a calculation on Twitter, it's about 650 days from top to bottom of a recession in the stock market. About 650, which means if you look at the recent S&P top and you think 650 days, that means that this bottom in theory would come in October of next year. And you think that sounds crazy because, again, my generation, we only just know up. And it's like, go look at the previous recession periods and then measure the amount of days it took to go from top to bottom, and you'll be shocked. And there's these bounces that happen in the middle where it bounces up, and it'll literally sit up at a high level for like hundreds of days and then come down and hit the lower low. And of course, on those bounces, it's going to be really tricky because the news is going to be telling you like, oh, it's good to go. We're, you know, everything's fine. And then really we're in the midst of an entire macro downtrend, and it's just a relief bounce. And then people start buying, and then they start panicking. And then, you know, like you're saying, once everyone really starts to think this is going to get so much worse, and everyone thinks that, and everyone thinks we're screwed, that's probably where the bottom is.
Yeah.
You know, there's still hope right now.
Exactly. But I feel that there's two factors, and you talked a lot about it. I just really want to emphasize for your audience that I totally agree with you. I feel that the macroeconomic environment now is quite tough. There were two things that's going to happen. One is that people will hold on to their money. You know, things are looking tougher. People start worrying for their jobs. The real estate value goes down. Costs go up. Everything goes up. So people will hold on to their money. They will spend less. And then at the same time, as for companies, a lot of the costs are going up. Electricity, at least in Europe, inflation cost increases. There's a lot of costs that go up. At the same time as consumer spending will probably be less, and that will hit earnings. And that, as you explained when you were on my stream, we have not even seen that yet. The only drop that has been in stock market so far is the speculative multiplier. People are willing to speculate less on the stock, but the earnings haven't really started dropping yet. But I think they will. I think the earnings will drop as well, and that hasn't even come yet. And then, of course, the stock market is worth less if the companies collectively make less money. Then the stock market goes down. I feel that will spill over on crypto assets and so on as well. But like you said, that doesn't mean that there won't be giant rallies here. The rallies will be so big that all over Twitter it will be like, you know, it was false alarm. We're back on track. 100K end of year is on again, and so on and so forth.
Yeah, and I think the now people are going to say, you know, because we're talking about recessions, how long they last, and that, you know, it's, you know, on average, what my calculation shows 650 days, which means October next year is the bottom. But that's for traditional markets. The way that Bitcoin reacts to these traditional market moves usually makes it so that it sort of lands in a slightly different posturing, though its directionality is the same. Up, they're both up, they're both down. But where, like Bitcoin could, you know, in theory, bottom here, the stock market bounces up, then comes back to a lower low later, and Bitcoin actually only retests the bottom and never goes lower. Like stuff like that is always possible.
Exactly. And you bring out all the key conclusions because blockchain prices follow the same pattern as tech stocks. Like if taking any blockchain project and comparing it with some random tech stock or Nasdaq, they follow roughly the same pattern. As I spent a lot of time studying that, with one key difference, and that is that if putting the charts on top of each other and normalizing the scale and the time frame, they look the same, but there is a huge difference. And the time frame is one order of magnitude faster. So it goes, the bull and the bear is like affected 10 faster. And it's easy to understand. I mean, a company, they have offices, they have employees, they have contractual obligations, they have hardware probably, they own factories. It gets slower, while in blockchain, it's software only, it's an open source culture. If someone does something good today, 100 people will have copied it tomorrow. It's 24/7 trading, and so on and so forth. So all that leads to a factor approximately 1 order of magnitude faster, so 10 times faster. It's not 100 times faster, it's not 1,000 times faster, but the price movements is about 10 times faster. And then the amplitude also, like the speculative multiplier, gets more crazy because there is no fair valuation. You cannot, a stock company has a fair valuation. You can start calculating what's the net present value of future cash flow or something like that. And if it drops below that, someone can go and buy the whole company, so that is protected on the downside, and on the upside, the same way, no one's going to pay maybe too much over that and so on. But with a crypto project, there is nothing. There is no protection on the downside. There's no limit on the upside, and the amplitude gets bigger. And then, so the amplitude is bigger and the time is compressed by a factor 10. That is not going to change, I think, at least not anytime soon. So that means that during these rallies, like you say, we will get huge rallies on the way up, and they will be faster than stocks will rally, and they will be bigger than the stocks will rally.
Yeah, it kind of is a good thing and a bad thing, because what you said, there's no real way to value Bitcoin like super precisely.
Yeah.
And so the upside speculation can be way out of proportion. We can go up way faster than you think, but then again, there's no way to really value it. Then people are going to be, it's just all like chatter, like, oh, it's worthless, oh, it's the best thing ever. And so like the extremes are just like massive,
Yeah. And what's so interesting with this, and that's where I felt we really have the same viewpoint, that the things we're talking about here, we can say with almost certainty that it's going to continue unless the whole industry disappears or something.
But quantum computing destroys Bitcoin?
Yeah, exactly. I mean, someone goes out, the old West bans Bitcoin tomorrow. Okay, then it's different. But if nothing like that happens, these behaviors will probably continue, and that we can say with almost certainty. While if we go out and try to predict what will the Bitcoin price be in September 2023, that is very difficult to get right. While if we focus on what will the behaviors be, that we're almost sure about. And then we instead try to maneuver to kind of position us for these behaviors that we're almost sure will continue. That is a much higher probability of success than trying to, price will be this much. That's
right. And so this is the other thing, I think. Again, I think that you are... Well, by the way, guys, before we continue, post questions in the chat so that later at the end I can look at them and maybe answer them. So if you have questions while you're watching, post them in the chat and just let us know. Make sure you guys smash the like button as we move on with this stream. So that's the next thing, is I think trend identification. How should we start this conversation? Well, so I guess I'll just say this. What is your favorite type of analysis and trading, or how do you pair those up? Like, because I know you're a big trend guy. You look for momentum, and you just sort of trade the trends. So like, what exactly are you looking at? So I don't know. I guess we can make it really interesting and say something like this. What are the next signals to confirm a trend change? For Bitcoin, right? Confirmation levels, invalidation levels, to the downside and the upside.
That's what we all care about.
Yeah.
Exactly. Great question. So let's bring it up. So, and I have a very specific answer, actually. If we just zoom out a little bit first, you can see the screen here, right? So if we look at the past history, and since we are in Sweden today, we use the Swedish colors. So gold is yellow. That's the Swedish one color of the Swedish flag. So that means up. Blue means down. And if you look here, if we just zoom from a helicopter perspective, we see these huge uptrends and downtrends and uptrends and then some chop, uptrend, and now we're in a downtrend. And if we zoom in here, we see that downtrend, according to this, my favorite way to measure that, has been going on basically from mid-December 2021 at 49,000, and we had one little fake out, but it almost immediately stopped out, and we continued in this downtrend, which we are still in. And what I'm looking at, I'm actually very excited exactly at this point of time here, because this is an interesting point in the chart. Let me pull this one out a little bit here. So I'm looking for two things, which if both happen, I will bet big here, actually. So the first one is that I want to see the trend turn back up. And what's interesting with trends is that after price has consolidated, it takes less to turn the trend back up. So now we're at 19,450. We were at 19,450 in June as well. But if price had turned back up, then it would take a lot for the trend to go back up, because it's so solid down at that point. But since then, we have kind of just spent time in this range here, and price has consolidated. And then in this particular trend measure I have, then it will take less for that trend to turn back up. I think if we're just up somewhere at 23,000 or something, trend will probably already be up. And then I'm looking for something else. I'm a big fan of horizontal levels. So I look for support and resistance, horizontal patterns, and then we see something very interesting. This level here at 18,600, it has been protected a bizarre number of times. Here, 18th June, 19th June, so it was second time, third time, fourth time, fifth time, little front run, 6, 7, 8, 9, 10, 11, 12, 13 individual days.
And I will add that it was protected against a stock market dump too, which is the crazy thing.
Exactly.
It's nuts.
Exactly. Thank you for bringing that up. If we overlay this with, for example, 1 divided by the dollar currency index, we see here that it looks basically the same, but recently, about a week ago, the DXY continued down here.
Well, can you explain that? Because I don't think I've seen it in your videos, but the 1 divided by the DXY.
Yeah, let me do that. So,
because some people might not know what you're talking about.
Exactly. So if we look at DXY, dollar strength index or dollar currency index, it's been in this parabola since spring, basically. But if DXY goes up, that means dollar is stronger. Then usually the speculative assets like stock and Bitcoin go down. So if we go to Bitcoin here, we can overlay this with DXY. And then it looks like this. But it's kind of hard to see how these two charts relate right now, because one is going up and the other one is going down. So what I've found useful for myself is that you simply go to TradingView here and you type 1 divided by DXY here. You can type formulas here in the trading.
Right. So now you're kind of like following it in the opposite direction, but it makes you able to like see the actual relation within the same direction, which is kind of interesting.
Exactly. So it's just inverting it so they go in the same direction. And you can type any formulas here. Many people don't know that. It's very useful. You can type any formulas there. And then it looks like this. And then we can see how well it has followed Bitcoin here for the longest time. And just have to get the scales aligned a little bit.
Right.
And then we can see very clearly here that here it has followed each other, but about 10 days or so, there was a huge spike in DXY. DXY went up, which means that 1 divided by DXY went down. And this was the point where, I thought that probably now will be the point where this support breaks, because it's dumping here. But it didn't. Bitcoin didn't dump here when it seems like, it should have. And it didn't dump there. And it was heavily protected here. This level was heavily protected. So that means now, if we get a rebound here on this, like DXY makes a bigger retracement and this one comes back up, perhaps this is the point where we get a rally in Bitcoin. So what I'm looking at this support, and it's even more interesting because I like classical charting. It's just explaining human behavior. And as you see here, there's a head and shoulders. So here's left shoulder, here's head, here's right shoulder, and can be maybe a second right shoulder. If that confirms on the downside, that is not good. That is, in that case, then a downside continuation pattern. But if it breaks up and it pulls itself over the right shoulder, then it becomes a bottom pattern instead. So that if we get up here somewhere around 23,000 in a controlled way and we hold it, and it's not just a BART pattern, but it actually goes up here and holds, then we will have many things that's pointing towards a rally. Key support held, didn't break when it should have. We create a bullish pattern in the chart because we get this kind of fulcrum bottom pattern, and trend is going to turn up somewhere around here as well if we get there. So if that happens, big if, I'm not saying it will happen. I don't know what the market will do tomorrow, but if that happens, that is some pretty good signs for a rally. And then I will probably try to enter here, keep some stop loss. If it doesn't work out, I'm not going to hodl it down or something like that. But I feel that there we could get some juicy entries for a rally if it happens. And if it doesn't happen, if instead this level finally breaks down, if whoever the bulls were who defended this level, if they give up, run out of money, walk home, and we close down here at 18,000 or something, then it's not looking great. Then
so that's the invalidation of a potential bottom pattern, which is interesting because we're so damn close to validation, invalidation levels. Like if you look at the horizontal support and the long-term linear scale downward sloping trend line, we're just like right there, and we're likely going to get some big moves off this level. But I find it so, like you said, it's kind of bizarre how many times that price was held at 18,600 and even against the dumping stock market.
Exactly. But, and of course we don't know how much money whoever is defending that level have left. Maybe it's unlimited. Okay, then it will bounce.
Hopefully it's unlimited.
Maybe they're almost broke now. We don't know. And then maybe it will down. But that's the interesting thing, that we don't need to predict. We can just, in my philosophy, I try to just react instead. I know that I don't know what's going to happen, but I can react. I can see what's happening tomorrow, and tomorrow I can take some action based on it. It's like, if this, then I will do this. If that happens, I will do this, and so on and so forth. That's
I think that what people need to realize is that if you're trading based off of what you want or what you think is going to happen, I'm not saying you should never do that. There are times and places for everything, but at the same time, if you're always just trading off of what you want or what you think is going to happen, you're probably going to struggle. And you're going to think, why is this not working? But if you start to just wait for certain things to happen, if you just, like this is what I like about you, is that you're very disciplined. It's like, okay, we're just going to wait until we actually get something to happen. Once this event occurs and we have these conditions there, that's the area to take action.
So I'm not buying today. I'm waiting to see if this happens. But the good thing to think in scenarios, I feel, is that you have thought through it before, because otherwise it might be too difficult to take action. You're not ready. But if you have waited for it, then you're ready. You can take action. And
Right.
because the interesting thing is that most people can make money in a market with a minimum of education in a simulated environment. Like if you go, you read one book in some basic investment methodology, most people can go in a simulator, they can follow the approach, and they can consistently make money. But most 70% of retail traders, at least in Sweden, if looking at some platform statistics, they lose money. And out of the remaining 30%, most don't make money consistently either. But those same people would be able to make money in a simulated environment. It's not that they don't know the basics. The basics are fairly easy. The difficulty is to stick to it when there's real money on the line, because it emotionally feels wrong. It feels wrong to buy when it's actually the time to buy, because everyone on social media is going to say we're going to go lower. And it feels wrong to sell near the peak, because it feels like this is just a dip. Why would I sell now? We're obviously going to 100K. It seems insane to sell here. And that's what makes it so difficult. And so beginner investors, they tend to do the same mistakes. They sell their winners too early. When something has gone up 20% or something, they feel I should better take home the profits. They would say things like, yeah, no one ever gone broke by taking profits. And they will sell because it feels I better sell before the profits slip away. But when something starts going down, they hold on to it. They hope that it will turn around. So they hold on the way down, but on the way up, they sell it too early. While a more seasoned professional investor would do the other way around. You cut the losers early instead. You take like a small cut instead of a big stab in the heart later. You take a small cut, you survive, and you feel a little annoyed. That's it. But you don't sit there and hope that it will turn around. You protect the capital. You cut the losers early, and then when you get on to a winner, then you never sell. Then you do like Warren Buffett or something. You never sell, because if you have the winner, it will probably continue being a winner until it no longer is, right? Everyone say Warren Buffett never sells. Yeah, he never sells when it's going well, but if it starts going bad, he's not going to buy something and hodl it all the way down to zero. That's not his strategy. So that's really the key of it, the whole trend following paradigm that I like for technology specifically.
Yeah, and I think people can learn a lot from you for that discipline and that ability to follow the trend and valuing truly getting confirmations and understanding what the direction of the trend is and actually waiting for the trend shift. Because it's fun to speculate, it's fun to predict, it's fun. People want to hear what your crystal ball says.
Exactly.
But it's like at the same time, if you start talking about your crystal ball, I mean, who the hell knows? Like we have so much stuff going on globally.
And war, I like doing
economic
that also.
warfare.
Yeah, it's fun to do it. It's fun to do it. What do you think? Will it go up? Will it be down? And it's fun to talk about it. I do that also, but I just don't trade based on it.
Yeah, that's right. And so what is like some of your I had a question I thought it was interesting. Like what is do you have a best and worst trade? Or not like your best and worst, but like do you have some stories about some of your best moments and some of your worst moments, and maybe talk us through that? What were the things you did right, the things you did wrong? Because we're getting into a point in time now where we're entering a season where it's going to be very volatile. It's going to be there's going to be a lot of decisions to make, I think, probably coming up in the next year. There's going to be so many opportunities, traps, and like so many decision-making instances. So people, I think, need to maybe freshen up instead of us just going up only for 10 years. You got to be a little bit more agile, a little bit more the ability to to adapt. And I think that the decision-making department in our brains better be ready for the next couple of years, you know?
Oh, absolutely. And it's a very good question. And I've made all the mistakes. So I spoke very condescending before, like beginners do this, beginner do that. Yeah, I was one of them because I'm an engineer, I'm a technology guy. I didn't know anything about investing. So for my whole life, I was in the middle of all the biggest tech successes in the world. I was, I worked with Ericsson. Then we were trying to make TCP/IP work over mobile. So we were working together with Microsoft because at that time, Microsoft Windows was the biggest platform. And I sat there in Microsoft Windows Office with a person who was tech responsible for Windows. And we were trying to make these protocols work. And then I brought up my computer and I searched something in Alta Vista. And he said, that's actually a better search engine. I just heard about it yesterday. It's called Google. And you can try it. I went in and tried it, and it's actually worked better. I thought, oh, wow, yeah, that was great. I never heard about it before. So, I mean,
wow.
And all those things. I've been on all the different...
That's unbelievable.
From the beginning.
Yeah.
All of them. And I never invested in anything. Instead, I didn't make the connection. I did the same mistake as everyone else. When, my taxi driver start talking about something, I thought, yeah, why am I not owning any of those? Maybe I should own some also. And that's the top. And then I hold all the way down. And then it feels, oh, it was so stupid. A couple of years ago or 2 years ago, I bought this. I mean, it was so stupid. I should never have bought it. I better sell while I still have some little money left. Then I sell. That was the bottom. And then it's like repeat the whole thing again on the other side. So I've done all these mistakes. And it was only later I realized that this is a learnable skill. I kind of didn't think about that when I'm buying or selling, there's somebody else on the other side that's doing the opposite trade. And they probably have more money than I have. So if I'm buying, why are they selling? If I'm selling, why are they buying? I didn't realize that this is like football or something. You can't go out and play FC Barcelona on the national stadium and think that you will win because you kicked some ball in middle school and at the breaks and think that that's going to go well. But that's what you're doing. You go out on the world markets and you're trading against professionals with billions of dollars. And if you have no education, no strategy, no plan, nothing. You just like, yeah, but I was in a stock club in high school, that shouldn't be so hard. And you go out and then boom, you never get to touch the ball. Like later, it's like, what happened here? And so the worst trades really was all due to the same thing. I didn't realize that this is a learnable skill. It's something that you need to take seriously. You need to read a book. You need to listen to people. You need to study it. You need to take it seriously. You need to kind of learn the profession of buying or selling or investing. It's not something that you're born with. It's like as stupid as going out, as I did, going out trying to play football and think that I'm going to beat the best teams in the world without any plan, without any practice, without any idea what I'm doing. It's probably not going to happen, right? You could, I could get lucky once. I get the ball once, I make a lucky shot, and it goes in the goal. But if we keep playing year after year, I'm not going to beat them consistently. It's not going to happen. So the worst trades were all the same thing. I didn't trade. I didn't take it seriously. I did all the beginner mistakes that you could read in the, 101 book, but I didn't read it. I didn't take it seriously. That is that. And then, of course, in crypto, we've all done the same thing. I bought Link when I just got into crypto. It went up 50%. I did that mistake then. I thought I should take home the profits. That was actually inspiration for my whole process. Then it went up 1000x after that.
Chain Lake you're talking about?
Yeah, exactly. Yeah.
Okay.
And I didn't realize at that point that you need a process. You need to, because the multiples can be so high. I never thought that things could go up 1000x or something like that. But then I quickly learned that it can, right? So you
Welcome
need some
to crypto.
Kind of process to hang on to that. But I've been very fortunate. I'm very happy with how things have turned out. But I've basically done all the mistakes in the book, and that's why I know that I don't know. I need to take it seriously. I know that this is not easy. And I think that maybe the biggest learning for the period going forward here is that we're entering an economic environment that has perhaps never existed while Bitcoin has been existing. So just because something never happened since 2010 or something doesn't mean that it can't happen next year, for example. So I think that it's important to be humble for the unknown. We don't know what will happen. I don't know. No one knows. And we need to be a little careful here, I think, and protect on the downside, protect the capital. Don't make, your life bet on Bitcoin. Don't let that become the worst trade of your life. That would be unfortunate. It's better to do mistakes on small things, do small mistakes. But when it comes to the big bets, don't,
Yeah, so I think that make sure you miss small, right? Miss small. Your mistakes should be small, because again, we are in an environment where, of course, like I said in my recent video today, there can be massive rallies that last a long time, even in a recession. But the downside risk is always there. The downside risk is always existing, so you have to protect against downside risk. And this is something I didn't say before, but it's like if this recession is going to be of the average size, that means we have hundreds of days to go before we reach the bottom. So it's like trying to buy the bottom and trying to guess that this is going to be it is like an impossible task.
Yeah.
Unless you're the guy with all the money sitting behind that chart, sitting behind that buy button, like, yeah, I'm putting the bottom here. Like, this is like I'm doing. Unless you're that guy, you have to accept that you don't know, and you got to protect yourself, for all the risks that exist.
If you are that guy, Kevin, please tell us, when you're...
Shh. No, I'm just kidding. But so, staying disciplined. So here's another interesting question. We have some time left. We'll just keep going with a few more. When would you actually break your rules? So you have a set of rules. Is there any moment where this might be a weirred question.
That's a very good question. Actually.
When is it okay to break your rules, or is it just never okay and you should never consider it?
I've thought about one thing, actually. It's a very good question. It's a very, very good question. What is the point? Because you have to be humble for being wrong. Things change. Just because something worked well before, maybe it won't continue to work. Just because this has worked well, maybe it doesn't tomorrow. I think one such reason could be if something fundamentally changes with this whole ecosystem. Say that, for example, you can't get your money out. Say that all the banks and governments in the Western world lock down access to crypto. Say that, okay, you guys, it's not illegal, you can buy and sell, you can just not take the money out into fiat, for example.
Yeah.
Okay, then, is there any point, that something like that? You see what I mean? That then maybe the methodologies and processes doesn't matter. I'm trying to optimize soccer, but the game perhaps has become American football, and I'm walking around there with my round ball trying to kick it. But there's another guy, there's a quarterback coming, running, and he's twice my weight, and he has, protection, and he's stronger than me, and he's running with the ball under his arm, and he's just running over me. And I'm standing there trying to, kick the ball or something. I'm on the wrong playing field. Things like that. If we wake up one day and we realize we're playing the wrong game, that could be a point where I would need to rethink the whole thing.
So something interesting that just reminded me of is that, so basically what you're saying is that you have a set of rules, but there could be a paradigm shift, or if there is one. And one thing I thought about was like my experience for Bitcoin, having watched it from 2015 and really in 2017 and 2018, where I was most focused, right? And seeing how it would move. And now we have all the institutions involved. The market cap's higher, the price is higher, and it's starting to change. So the playing field is actually changing a little bit. And actually, it's almost like you're saying, you have one type of sport, and the sport, it starts changing a little bit. The plays start getting a little different. They look a little different, right? And I've noticed that too with Bitcoin. And it's also, I've also started, been trying to get used to the fact that Bitcoin's not acting like it was when it was at 10K. And I'm trying to really pinpoint. It can take a while to really absorb it, but I'm trying to still get in the groove of like this new institutional style trading, how it's a little bit more methodical, slow, a little bit more, not just like snappy, like before you could pull like 10% like that, like any day. It was just like so easy to snap the price. And now it's a little different,
absolutely.
the plays are changing
I
a
agree
bit.
100%. And I mean, several things have changed as a result of that. One is that it has gotten more correlated maybe with other assets. Some big portfolio manager, if he is down on his stocks, he has to maybe rebalance the portfolio, and then he's going to go and sell gold and Bitcoin as well to rebalance the portfolio, even if he believes in the future of them and so on. While before it was maybe more people who only invested in Bitcoin or crypto and so on, and then maybe don't care so much about what happens in the rest of the world. And the other thing, I think many people thought that it will get easier because price will only go up. Now the institutional investors are coming. No, that's the professionals. They are better at manipulating you than, the average guy on Twitter. They know, they've done this for their whole career. They talk it up in public when they want to sell, and they talk it down when they want to buy. And they are masters of manipulating the price. With like Wyckoff figured out 100 years ago how to do it. It's like there's a psychological game here. You bring the price up and then you bring it down a little bit, then you bring it above the previous level. Then everyone is, including myself, is celebrating. We have a breakout. But it's an engineered breakout. Then you fake everyone too long, then you bring the price down, and you fake them around until
and Jamie Dimon, even from JP Morgan, he's offering Bitcoin as a product to his customers at the top, and then once it gets marked down in price. So I've been thinking about things recently as markup, markdown, because it's more of like it's almost like, it kind of keeps you from FOMOing or panic selling. Like when you think of it, the price is marked up, time to take profits or whatever. But Jamie Dimon, after the markdown from 65. He's it's the worst thing ever. This thing will just fail, or so. Like he just says, like it's so unbelievable. Like how he's like, all right, guys, you can have Bitcoin markdown. It's the worst ever. Sell it back to me. Basically, give me that back.
Exactly.
Like,
should always keep this in mind. I don't know if many of you here in the audience were looking at Tesla, for example, back in a couple of years ago. Let's bring it up. Where the media was very, very in agreement that where is it gone here? That it's hopeless and it's,
I remember this.
Yeah, exactly. Now it's the lines are not correct because
there was like a huge effort to short Tesla. Remember that?
Exactly.
It was insane.
Which was during this period here, and as late as in 2016, 2019, this was basically the period here. It was very gloomy and gloomy, and all the social media. If ever you posted something positive on Twitter about Tesla, saying that but actually they're selling cars, then there was like everyone jumped on and said, do you even Tesla Q? Do you even know they're clearly going bankrupt? And there was so much manipulation going on, and that was basically here. While if we ignored all the buzz on social media and just look at the chart, but that was a pretty solid support line. And I did tweet about this here at the time because I felt it was such a strong support. And it sure enough, it bounced there. Prices were different then because they made a split after that. But so a key insight really is that don't listen so much on what people are saying on social media, because it might be intentional misleading.
In fact, if you if you do just listen to people and you
Yeah,
just listen to the news and you just listen to what people say, you're very likely to get it wrong. Because
exactly.
again, contrarian, being a contrarian is important. If you're just saying,
Yeah,
oh, well, like even right now, like, well, everyone's bearish. Everyone says it's down only. I made a video recently kind of like warning about that. Like, okay, everyone's bearish. Maybe we should be like not listening to it too much and just keep a mind open, similar to what you're saying right now.
yeah.
Yeah,
And
you
that's
know,
it. When people say that, but I don't believe in technical analysis. But I mean, technical analysis is just a way to try to uncover what the big players actually do instead of what they say, because they do try to say the opposite. But it's much harder to hide the actions in the chart, because if they say it's going down, it's going down, it's going down, but actually support holds and it's actually going up. Okay,
yeah,
but then someone is buying, it's not
yep.
going up by itself. It's going up because there's bigger buy volume than sell volume. So that is a way to kind of find out what they are doing.
Right. And it's like, when Bitcoin was down below 10,000 and it started breaking 10, 12, 13, 14, people were still talking crap on Bitcoin. Goldman
Yeah.
Sachs was still talking bad. And then it turns out a year later, 2 years later, oh, by the way, we bought Bitcoin and we're going to offer it to you now at a
Yeah,
much higher level. So,
exactly.
yeah, I think that, a lot of people say, oh, it's only about the fundamentals. And then technical guys will say, oh, it's only about the technicals. I mean, it's got to be both. It's got to be both. If the chart is holding a certain level and everyone's bearish, well, the chart's speaking a little differently, right?
Exactly. Yeah. So I think that's an interesting perspective.
And that's
on,
actually what's happening now. Bitcoin is holding that interesting level you mentioned, 18.6. I find that to be so, while the stock market's coming down. So
it is very interesting, isn't it? So we'll have to see what happens here.
But let's see here. Yeah, I mean, we've gone through a lot of different things. There's definitely going to be some questions in the chat. Let's see what people have asked in the chat. People are saying, "I love Mr. Larson. Mr. Larson's a great football player. You play football, I guess."
I don't really.
I don't know. This is what someone's saying. My fellow countrymen from Eric M. with a Swedish flag. That's right. Let's see. Is Bitcoin going to be correlated to traditional markets forever? Well, that's an entire discussion. Bitcoin's correlation to the stock. I mean, do you want to quickly cover that real quick? What is your opinion about that correlation? Like, do you see a decoupling? Of course, everyone wants to know, are we going to decouple finally ever? Or, what do you think about that?
Sorry, just connecting the charger here. I do think that it will decouple. Yeah, I think over short time frames, it will stay coupled. But over longer time frames, it will not. I can say it with 100% certainty. If we zoom back out, I can say with 100% certainty that Bitcoin over long time frames will not be simply correlated with the stock market, because there's only two outcomes. Either Bitcoin, as all global technology, it becomes a huge success. It becomes Bitcoin, which is internet money, and it is Bitcoin that is the global money on the internet. Or it becomes another technology. It becomes Ethereum maybe, or it becomes another something which isn't even invented yet, but that is even better. There is no middle way. It's either or. Either it becomes Bitcoin or it becomes something else that surpass it and does even better.
Do you think that it could just become something that's like a gold and it's more of like a cult following, kind of like it is now, but it's sort of, is there you don't think there is any in between at all for Bitcoin? You think it's probably just one or the other?
If we look like, say, 20 years into the future, I think either Bitcoin has advanced or it has fallen back. And we're all sitting here, you and I and everyone else, and we're talking about some other project that's even more exciting, and that is, the future. And then Bitcoin will not be worth $20,000 each. I think if we look 20 years into the future, there's only two outcomes. It's up or it's down. It's not going to hold this middle way. I do not think so.
Interesting. That's very interesting.
And then, of course, there is the other aspect also, which is the fiat value, right? I'm talking here in like constant monetary value or constant purchase value. Fiat could keep inflating. Then anything, goes up in dollar price. A potato will go up in dollar price, or the cup of coffee will go up in dollar price. Everything will go up in dollar price. But I'm not talking about that. I'm talking about like the real appreciation or failure to. So I don't think over long periods it will not stay correlated. It has to succeed or fail.
Yeah, I think that, actually this is something I was mentioning recently, is also the high leverage in this market makes it so that it makes it harder to decouple. So if regulation comes in and they start to say, okay, you guys can't be offering this much leverage all the time, and the leverage decreases, I think that it'll become less correlated, because what I see is that, like, okay, yes, the leverage can push the markets up and down faster. Okay. But it's also when you have risk on, right? When someone's taking a lot of leverage, and then they're more prone to, like, let's say the stock market's coming down, getting out of that position, so that it's like the level of confidence becomes so connected so closely, right? Because if there's a lot of leverage and the stock market is coming down, people need to, de-risk, and like that leverage, I think, increases the correlation. It's kind of a theory, but I feel like it's got to be kind of true, right? I mean,
oh, that's very interesting.
I don't know.
I never thought of that. Yeah, you're right. I think,
because it's a lot of risk. So if people are risking, I mean, like once the traditional markets are doing something, all that leverage are going to start moving, and it's just like, I don't know, So someone's asking, what's the weather like in Sweden right now?
It is cold, rainy, and quite unfriendly. I don't recommend coming here in October or November. I recommend the summer or the winter. You do either or. Either you toughen up, you go here in the winter, or you enjoy the beautiful summer. On the beach.
That's what my father said, because my father is the one that got me a Swedish citizenship, and he said, go there like in July. This year coming up. He said, go there in July.
Exactly. We Swedes are almost nice in the summer.
Yeah. So someone's asking, would a monthly rejection off of the 200 SMA likely preclude a melt-up rally in equity markets? I would say a melt-up of any kind is unlikely right now. But what do you think about that?
I'm not sure, actually.
I'm not really sure what you mean by this rejection of 200 MA, because we're above it. So I'm not sure what you mean, actually.
Yeah, maybe minimum bounce. I'm not sure either. But
let's see. People are talking about quantum resistant chains. We're not going to get into all of that.
Yeah.
People are asking, how come this is happening? Well, we just had one on his channel. We're doing it on my channel now. But we've been going for longer than we did on your channel, which is, I think, an hour 12. I don't want to go too long. What are some final thoughts here that you have about maybe the current situation in the markets?
I think it's rough. I feel the situation, the outlook is kind of rough. Actually, it's unless there is some major political moves here that they sell out the future to win the next election or something like that. I think it could continue to be quite rough. People could start losing jobs, earnings dropping, companies, inflation, costs go up. I think as a human, I feel sorry for, I think a lot of people will lose their job. I think it was going to get a tougher period. As a trader and investor, I'm excited and I can keep them separate. I feel that there's going to come incredible opportunities through this whole chaos that's unfolding in front of our eyes. And I feel that the mistake that many people will do is that they will give up. They will lose interest. They were interested in investing when it's going up every day, and now they will lose interest. And then they're going to miss when it's actually turning up, which is the actual buying opportunity. And I think if just staying in the game, if I can give one advice to your audience, that is to, don't stop subscribing to Kevin Svenson. Stay on your game. Don't quit when it gets
Show my
boring
channel.
here. And next year when it feels like this hopeless, pointless to invest, just keeps going down. It's so boring. It's hopeless.
That is so
stay
important
on it
because
so you don't miss when turning up. Yeah,
I see my friends are like. My friends, when the prices are at their all-time highs, I'm getting texts like all from my close friends and people I know and people from high school I never talked to in years. They're like, "Yo, Kev, should I be buying right now?" And I'm like, "Man, this has got to be like, I don't know." It was still a little blinding because we were near the breakout of the all-time high at 69K, and it seemed like we were going to go up more, but of course the stock market turned down. But it's like now they're all gone. It's a ghost town. No texts, nobody cares. Oh, you're crypto, ha ha ha.
Imagine if it continues down and it stays flat for half a year, 1 year. Imagine how few people that's going to be left. And they're all going to miss and then they're going to buy again at the next peak and repeat the mistake. That's why this is like, it's very difficult to predict the future of the market, but the type of behaviors is not difficult to predict. We can almost say with certainty those kind of things because they keep repeating. They will always keep repeating because it's human psychology. And if we're not aware of that, we will consistently, lose money.
I think that it's like if you really think about that behavior that you're talking about, and it's like, when would a big player when would they sell? How would they sell? They would need a lot of attention on the specific asset, and they would need news cycles to be running it to get that profit, to extract that value out of the market. So it's like when you start to see that, like everyone's getting excited, the news is talking about it again. You know that the big players have the attention they need to get out.
Yeah.
So it's like you have to actually flip this like a little bit in your head, like flip, like, wait a minute, everyone's talking about it. Now there's actually potential to take massive profits here because everyone's talking about it.
Exactly. Did you see here now how they
don't just dump behind
outside? My coworker Ngop here, she's very nice, so she asked them to pause 1 hour, but now that 1 hour has passed, so now they're starting crashing again.
No way! Wow, they're dumping on you. Literally, it's like right on your head too.
Literally on my head.
But yeah, this has been an awesome talk, and I feel like we could go on forever. And there's just so much to talk about. Obviously, we're entering a recessionary period. There's going to be crazy market movements coming up. There's going to be so many more developments. The Fed's going to be talking about different things, making different decisions. We're going to see inflation numbers come out. We're going to see economic warfare. So there's going to be so much to keep up with. And I would definitely love to have you come back on. And I would love to. Your
so, the only thing you need to do, guys, is to subscribe to Kevin Svenson and CTO Larson, and you're good.
That's right. That's right. Yeah, I think I messed up the title here. I didn't realize that it wasn't going to be the YouTube title, but
you can still edit it afterwards. So that's no problem.
Yes, but amazing interview. I love to talk about the trends and how you see them, and we actually discussed the invalidation levels of the current area, and he discussed that earlier in the video. After this is done, I'll put timestamps in so everyone can go back and search. Guys, smash the like button, subscribe to CTO Larson, and that's going to be it for today. I'm sure we'll do another one at some point.
Greetings from Sweden.
I got to get a Starbucks.
Thanks for having me on.
Have a good one. Oh yeah, say long live Bitcoin in Swedish.
Länge leve Bitcoin.
There you go.
Thank you, tack. Hej då.
Hej då.